Hey guys, welcome to Little Panda Forex. So in this video, we're gonna learn about 3 rules that you need to be a smart money trader. So only 3 rules to trade smart money concepts. Number 1, go with the trend regardless of trading style. So this is very important. Always go with the momentum. Don't go against the momentum. That's where you're gonna get burnt. Number 2, wait for a clean BOS, break of structure, and you need to have a imbalance. The width part is highlighted in yellow to emphasize that imbalance is key. I will show you what is an imbalance. And number 3, trade when price reaches the order block. Don't just put a buy or sell limit, monitor price action and go from there. So now you know the 3 rules. How does this look like when you go into the charts? What is an imbalance? An imbalance is an area in the market where there's a gap, a void, or whatever you want to call it. Is deficiency in price. So this is an imbalance because we had a wick down and we had this wick going back there, but there's nothing in here. Price didn't recover it. Here we had another section of imbalance, but as you see, price came to that, filled the imbalance, it went even higher, and then it moved a bit down. So that is an imbalance. So it's like a little void in the market where price has not really touched either from the up bit or from the bottom bit, and it's just a deficiency in price, which is not healthy. And usually it gets filled, not always, but most of the time. What is an order block? So order block, it is the candle before we have a break of structure. Let me show you. We know that here we had a bit of structure, right? So what is the order block? The order block is this blue candle here. Why? Because price was building structure and it broke below the structure. So this is a BOS, break of structure, and that candle there is the order block. As simple as that. So in theory, people think, okay, so if price comes back to that area, we're gonna have some sort of reaction and then it moves down because the overall momentum, the trend is bearish. Order flow is bearish, okay? That's order block. What do I mean when I say break of structure? It's basically like this, where price is playing around, raging for a bit, and then it moves in a direction. That is a break of structure, as simple as that. This is a clean break of structure. Let me show you. So if you have price playing around, boom, that's a bit too aggressive. Ideally, you want price to move up, down, up, almost like within the range, and then break into a direction. So a good break of structure is this, where price played around a bit, didn't know where to go, and then it decided. This here is not a good break of structure because look, price played a bit and then it moved up, and as you can see, it was manipulation, just moved down quickly. So that is not a good break of structure. So yeah, playing around a bit, give it some time, move down. So how do you actually trade all of this now that you know what this means, okay? Let's go and find an example. So we can see that this market is bullish. It's going up slowly, making higher highs, higher lows. So here is an order block level down here at this red candle, because we had structure and we broke above it, giving us nice imbalance here, nice imbalance here, nice imbalance here and here. And also this was the structure that we broke above, okay? We expect price to come back to this level and have some sort of reaction. So let's play it. And by the way, guys, this is a very simplified version of smart money. There's so many other areas that I'm gonna briefly mention in a bit. So we wait for price to come. All right, so price came to this area, and usually what you would do, you would go into a smaller time frame and essentially look for something like this. Structure, break to the upside, okay? Okay, so what happened here? Price came, it bounced, creating another break of structure, but again leaving some imbalance, came back, tapped into the order block, and then from there start going up. And here we have another break of structure, so price is likely to go to the upside. You need to go to the smaller time frame, and essentially you're looking for same thing as the high time frame. Structure, break, that's going to be the imbalance, and here is likely to be an order block. So you want price to come here, tap, go. Where would you put your stop loss? Let's assume this is the smaller time frame. You would put your stop loss either just underneath this order block or if you want to play it safe, you can put it under the structure, but obviously that's going to eat into your risk to reward, and then you just leave it. So till here you would have got your 2R easily, but if you left your stop loss underneath the order block, you would have got your 5R. So it's really up to you. So smart money, this is a very simplified version. You're waiting for break of structure, imbalance, come back to the order block, mitigate, and then move. And you have to go with the trend. But there's other areas in smart money. There's liquidities, so trendline liquidity, equal highs, equal lows. There's semantics, there's internal, external liquidity, there's order flow. There's so many other things that this thing gets really complicated. But this is, in a nutshell, it's the simplest form of smart money, like very simplified. So if you go with the trend, you got a break of structure, you know, just wait for that to tap in back to the order block and then buy. It's very important that you go with the trend. If you try to go against the trend, which is counter trend, yeah, things are gonna become very difficult and you start gonna have L's. So yeah, don't go against the trend. All right, guys, I hope this video was useful. Comment below anything else you want me to do in the future. Leave a like, subscribe if you're new to the channel, and peace.